to the world marketplace, as it were. And then quickly put in context our own role, the BRICS New Development Bank. I think at lunch we had this interesting dialogue as to what is new about the New Development Bank. And as someone put it, that was Minister Patel. He said, will you be new 15 years later? We'll try to attempt to answer those questions. But clearly, I think it's my duty to share what is new and what is different about the New Development Bank, and I'll try to do that. But before I go down that path, I was saying that I'm delighted to make my first trip to any of the member countries of the BRICS New Development Bank, and that trip is to this country. I have had an amazing 2 days of fruitful discussions, which as part of the concept to readiness part of my talk, I will try and cover. But I go back with enormous hope and confidence that what I have seen can be translated to a reality, not only in South Africa, not only in larger Africa, but indeed in all developing countries around the world, which I'm sure in due course the New Development Bank will try and engage with. In many ways, the last 2 decades, the sub-Saharan region has been one of the drivers of global growth. To put this in context, GDP has grown from about 400 billion in 2000 to more than 1.9 trillion in the span of 14 years, and has significantly changed the global equation, as it were. I think the region is an integral part of the South-South cooperation and has grown steadily and strongly, and I am sure it will continue to grow. We indeed, the New Development Bank, I call the product of a new South-South cooperation. We are, in a way, the first multilateral development bank to be set up on a global basis by countries of the South. We have an example in south of the US, South America, where there has been an initiative from countries of that region. But we go beyond. We cut across the whole world, as it were, the continents of the world, in setting up this bank. So clearly, I will be remiss if I don't talk about the rise of the South, the challenges in terms of growth, which is, to me, a question of absorptive capacity, and the impact of technological shifts in everything that will happen to us, developing countries. In the last 7 years, since the global economic crisis, recovery has been fragile, and even in the context of unprecedented liquidity in the marketplace, there is uncertainty as to what happens next. In all this, I think it is the emerging countries which have been, I would say, the bedrock of economic growth in the last, post the crisis of 2009. In fact, 75% of the increase in world GDP terms, in PPP terms, since the year 2009 has been contributed by emerging markets. 75% of the increase in GDP. I think the momentum is already there, and we need to see how can we make this momentum reach out to all emerging economies so that growth is even and not patchy. Growth, by that I mean growth is strong in some countries and not so strong in others. How do we make growth equal in terms of its opportunity across the entire developing world? And today, I believe that South-South cooperation is now poised to supplement North-South flows. And to me, the fact that 75% of the contribution to the increase in GDP happened from the South clearly articulates this, that South-South cooperation is in a way supplementing what used to be, I would call, North-South transfers. And this is happening not only in terms of finance, but it's also happening, to me, more importantly, in terms of knowledge and sharing knowledge. I think it is only through sharing knowledge that we, countries in the South, can actually realize our fullest potential. Seek knowledge from everywhere around us, and particularly seek knowledge from the learnings that our other countries which are on the emerging route have acquired over this, their journey, as it were. Sound economic policies have contributed to this growth, and I'm sure this growth, which in a way, the beacon light was China, and to some extent India provided the momentum thereafter, and I'm sure it is now Africa which is poised to provide this growth momentum as we go along. And beyond that, the other emerging economies will kick in to keep the growth engine going. In terms of effort required for the developing countries to keep growing, there's always a view that, why do we need more development banks? There are already too many. Let me put just a few numbers in context. Various estimates, but if I use one estimate, it talks about the need for $1 trillion investment every year in infrastructure in the emerging world. And if I look at how much was actually brought to the table by the development banks, it was just about $100 billion annually. So we're talking of 10% of the needs met from the development banking world. So clearly, whatever the development banks do is not enough. And there's a role for development banks to help mobilize funding for these efforts, this large effort in terms of adding infrastructure. And thereby, once you add infrastructure, you can then set up your manufacturing program and other industries in sequence. So clearly there is a role. But as the minister said, we need to share what is different about us. What is it that we will do differently? And that, as I said, I will do in a little while. Before I proceed, I want to spend just a couple of minutes on what I think is a good economic development model that we can, in a way, learn, share, and then emulate. And that model, when I settled in China and looked at that model in a little more detail, to me sounded something very interesting. They first invested in investments in agriculture, animal husbandry, fisheries, water, and flood management. Basically, food security in a way. Secondly, development of massive infrastructure, which anybody who has traveled to China can visibly see. Thirdly, development of manufacturing and the industrial sector, as it were. And fourthly, development of the services sector, which is now ongoing, and addressing some of the issues around climate and environment that came as a consequence of the earlier development project. So basically a four-stage process. And whichever way I look at it, this cannot be faulted. And this model is replicable across those emerging countries which have yet to go up this chain. Well, if an emerging country already has the infrastructure and address its food security, then you could go to the third stage, but otherwise you go through these stages. And with this effort, what was achieved in terms of growth, sustained growth in double digits for over a decade, and thereafter massive reduction in, I would say, unemployment, and bringing people above the poverty line. About 600 million people brought above the poverty line in the last few years. All this was possible as a consequence of the sort of growth that is taken. So to me, as we start rolling out the new development bank, we can start by sharing some thoughts on what was done in other countries. I took China as an example, but I think there could be other examples which we could use in terms of enriching our knowledge as to what could be done down the development, our development path. Today, there are exciting developments happening all over the country, and I will just pick one, and then we could look at how different things are today from what things were, say, 10, 15 years back. 10, 15 years back, let's say an emerging country was setting up a power plant. Perforce, it went in for a coal plant, and there was finger pointing that you are basically polluting the environment, and you are the problem. I think today we can, I would say with full confidence that we will be part of the solution and not the problem. And maybe in a historical context, the problem was from elsewhere. And I won't go down that path. But today we can be part of the solution. How? I think green technologies are coming up, which even as we talk on an annual basis are becoming more and more competitive. And if we were to embrace green as a principle in terms of our development context, it becomes a part of the solution and you don't stay a part of the problem. I think these are the thoughts that we will have to explore as we go along to see how is it that we will be different in terms of our efforts to have some challenges which historically appeared, not solvable, solved even as we go down the growth path. Clearly, as I said earlier, if 100 billion is the funding that is coming from development banks and the demand is $1 trillion, you have a challenge. And what we believe we would then like to do is do our own bit to help resolve this challenge in terms of what we bring to the table for our member countries. And that probably is a good time for me to shift gears and talk about the New Development Bank and what we intend to do. Indeed, as the Minister indicated, we have tried to act with speed. We were in a form incorporated or came into being in early July. I moved to Shanghai with a few colleagues in mid-July or third week of July. And we are at a stage where we can now say that the foundation has been laid, the policy framework is in place, and we should be able to get to lending our first or making our first loan to all our member countries, maybe a loan each to all our member countries by April of next year. This brings forth several questions. How could you work at speed? Are there going to be compromises in the things you do, and so on? And I want to put those things in context. I believe that things can be done in parallel. Our initial startup capital, as it were, was human capital contributed by our member countries. There were secondees from member countries. There were secondees from institutions in member countries, and all of them worked together to basically, I would say, create this foundation and let us get ready for takeoff, as it were, as an institution. And that stage we now reached. So we will be in a position to start our own recruitment starting the coming month. And we should have a complement in place by April or May. But then you may ask, if that is so, we have just heard you say that you want to make your first loans by April. So we will continue with some of the very experienced secondees that we have in terms of project preparation, project appraisal, and the whole lending process, as it were. And they will work in parallel as we start recruiting, get our teams up, help us meet the deadline we have set for ourselves. This deadline, I think, is a shared deadline. I have shared this deadline with our board, and this deadline I shared with the governors when we first met in Russia at the time we came into being, that we will do our first loan in April, and I think we are scheduled to do that. In doing that, we need to be different, and this is where I will share what is the difference that we will bring to the table, or in terms of our approach that we will bring to our member countries. I think the principal difference that we will bring, I hope, is going to be speed. And that speed is critical for the emerging world. We will run out of time if we do not act in speed. So typically, we cannot afford a 2.5 year appraising time for a project. We cannot afford thereafter delays in project execution because you have certain conditionalities which prevent execution of the loan or execution of the project. I think these are the things that we would like to address up front, while not compromising on any of the best practices, be they with regard to the environment or be they with regard to procurement. I think that is clearly part of our strategy. We do not want to be the problem. We want to be part of the solution. So without compromising any of these things, could we look at, for example, the country systems that have been in place in our member countries? And we have taken a quick look at the country systems in place in our member countries, and you find these are adequate to meet best practices in the areas that I was talking about. So can we not adopt these country services as foundational principles in terms of what we go about to do? I think these are the differences in terms of our approach, which we believe will make speed possible as we go along. That's one fundamental difference. I think the other fundamental difference, right in the beginning, I shared with our own board and owners, is it not time that if we say that this is an institution set up in the South-South context, that we try to see whether we can raise the resources that we need in the South amongst our member countries. So, for example, is the market, that is the capital market which will provide your funding, deep enough in our member countries? Is it deep enough in China? Is it deep enough in South Africa? Is it deep enough in India? And I will then explore other countries as we go along. The answer to me, even sitting and doing a desk exercise in China, was the Chinese market is deep enough, and I could easily access renminbi for the New Development Bank in amounts that will meet our requirements without any particular problems. And whatever there would have been in terms of preconditions for somebody to access markets, I believe the government will be willing to address those constraints and make it possible for us to access these markets. My quick study in India indicated the market is deep, and virtually there are no constraints. We could access the market today because there are no constraints that have been set up by the government or the regulator in access to the marketplace to raise monies. I came to South Africa yesterday, and one of the first meetings that I had was with the savers, the pension funds, the mutual fund association. I asked them a very simple question. If we were to access this market, first, will we crowd out somebody else who wants to raise money here? Will we crowd out other borrowers or other people who are accessing this market? And the answer was a categoric no. This market is deep enough, and we would expect that we will, by your coming in here, get newer instruments in which we can invest. So clearly it is a win-win for us. I put the same question to the CEOs of the top 5 banks that I met today, and I had the same answer. And I had a team and I had a dialogue with the Johannesburg Stock Exchange. Again, they welcomed us and said this market is ready for you to access. We don't see any conditions which will stop you. So market in the South, in at least 3 members out of 5 that have done some preliminary work, clearly indicate to us that these markets are ready to be accessed and ready to meet a fairly large proportion of our needs. If we need, certainly, we will access the global markets. If a client needs money, we will access the global market and provide that currency. But the point that I'm making is, start with simplify your processes. To simplify those processes, make sure that you do not compromise on the standards that you want to emulate. Secondly, try to access to access monies in your own home countries. Next comes a very interesting question. If you have raised monies in your home countries and you want to lend it in another member country, is it possible? And indeed, I think our founding fathers had talked about a contingency reserve arrangement for our currencies, separate from the BRICS New Development Bank. But it's the BRICS contingency reserve, under which, again, without being too technical, swap arrangements are being worked between our currencies, between the currencies of the 5 BRICS countries. And today, before coming here in the morning, we had a dialogue with His Excellency the Governor of the Reserve Bank, the South African Reserve Bank. And it was music to my ears when he said a currency swap which will make possible to borrow in one currency in a BRICS country and lend it to another is eminently doable. He basically said nothing is going to stop this. There are no issues which would stop this. And during lunch with the Honorable Minister, she promised that she will be the advocate to try to push this across the BRICS members. So I think if we can push this single thing through, 1, raise money locally, 2, swap them so that you have currencies that can flow from one member to another seamlessly, I think you have met a big challenge that otherwise, in a developing context, emerging country faces. And that problem is the problem of what I term as currency fluctuation and exchange risk. I would say that most developing countries have made a mistake in the past. I was a borrower in my old avatar, as it were, as in ICICI. ICICI is probably the largest number of credit lines from global multilateral banks. And the exchange risk impact was the equivalent of 15 to 20% in interest rate terms, whereas the interest rate was very small. But in our mind, it has been set that the interest rate is the key. I think for an emerging country, the interest rate, frankly, doesn't matter. It is the exchange risk that you bear on that hard currency loan, which is unhedged, which is the crushing thing. And if we use our local currencies, that risk is eliminated. So you may end up paying a little more in terms of interest, but that burden on your head is off forever. So I would think that it is possible to work with the local currencies and make this bank different. So to me, these are some of the characteristics of newness. Newness in terms of your approach to certain aspects which previously caused delay, newness in terms of the speed which you want to bring to the table, newness in terms of the funding choices you bring to the table, and so on. The fourth newness is in relationship to what I would call the way we approach our member countries. I want to drill down in the team and our team, and which we've already done, the thought that we are talking of a partnership. We are talking of partnership with our member countries. We are not talking of a borrower-lender relationship per se. We are talking of a partnership, and as partners we will talk, understand, and then do what is required in the member countries. So basically work with the member countries. And I think in that spirit, we want to approach the most important thing that, the most important point that Honorable Minister made, our setting up of the African Regional Center. We certainly do not look at the African Regional Center as a place where what is collected in terms of messaging here is sent to the headquarters, but a place where if we have to give effect to what I said, a partnership, that partnership is worked out here. That partnership in terms of, and I again want to stress, it is the African Regional Center. So basically it will be a partnership for looking at opportunity in this whole continent, as it were, and working with the member countries, firstly in what I would call project preparation, and thereafter as we go and build strength in terms of appraising projects, and certainly in terms of implementation of projects and all the handholding that is required at that point in time. So the entire spectrum, I think, is what we want to do as we go along in terms of the African Regional Center. And it's for that reason I shared this thought that we have no preconceived notions as to how big this enterprise or this institution should be. It will be as big as we as partners determine. And I think that determination will happen very soon. So several things which are different, several things which we want to do differently. And my deliberations in the last, as I said, 2 days gives me enormous confidence in terms of all the opportunities, in terms of the preparedness, and in terms of probably our ability to attract talent from this country. Last 2 days, that has been a key theme when I have interacted with the various groups that I mentioned, trying to understand the talent pool, and I am convinced the talent pool is very deep, and we at the New Development Bank can certainly leverage this talent pool into our activities as we go along. So I go back to Shanghai with thoughts of a partnership which is in the making, which will certainly be win-win, not only to our partners in this country, our member country, our founding father as it were, but to the larger African continent. In terms of speed, I want to make a last point. Even as I speak, my colleagues from the bank are coming into this country to discuss a project pipeline which was shared with us just a few days back. And if I assure you that this was not pre-planned by me, because I am here, you will not believe me. You will say it's too much of a coincidence that you happen to be here and they just dropped in. But it is a frank truth, because the leader of the delegation met me just before I was leaving and said, "When are you in South Africa?" I said, "On these days." He said, "Oh, I am reaching there a day later or 2 days later." But I think that too, I'm happy that it's happened that way, because that indicates the intent that it is not just a top-down push to take what they have in terms of on their plate, as it were, and address it with speed, but it is part of the process, and the internal mind works in that, their mind works in that direction to realize what we need to realize. Finally, to conclude, as I said, we at the NDB will listen, learn, collaborate, and innovate. I think these are the key phrases that my colleagues and I will like to build into our operations. As I said, we will work with speed, and a significant aspect of this path is to establish an setup here which will help us speed up activity in across Africa, and that is our African Regional Center. And clearly, we are conscious that we may not be able to be present in all areas of the agenda of development in our member countries, but we'll endeavor to be in those where we believe we could be capable of adding value. The last couple of days I have learned a lot. I take it back with me, and I also take back this message that in the development process,